Welcome back to my channel, guys. It's Dennis from Simplify Investing. Today, what I want to talk about is the Walt Disney Company, ticker symbol DIS. If you're a Disney shareholder, I highly recommend you watch this video till the end. Also, please don't mind my voice. I might have come down on the Rona. I'm trying to fight through it. So if you appreciate this video, please hit that like button. And also, if you're interested in more videos like this, please subscribe and let's get started. Now, the article I want to talk about today is from Bloomberg, as you can see right here. Disney activist Loeb urges using Dividend to fund streaming. So if you don't know, Disney Plus obviously is growing. However, the funding for it is very, very minimal. They're really relying on their old content that they previously made from Disney, right? And using it and putting it on their platform, Disney Plus, but they're not really coming out with too many new shows. And what he wants to do is basically increase the funding for new shows. So if you're not familiar with Dan Loeb, he's actually the CEO of Third Point. It's an asset management firm based out of New York, founded in 1995. He is an activist investor. As you can see here, the firm often engages with company management and boards to improve performance and will also take passive stakes in companies with a long-term view of value creation. So if you're not familiar with what an activist investor is, pretty much sums it up right here. The firm often engages with company management and boards to improve performance. So he basically buys a large portion of companies and tries to sway them in what he wants them to do, but also to mutually benefit all the shareholders, not just him. And usually this is pretty good, right, for a stock. I really like to see activist investors because they really like to influence the board on these different companies, and usually they're thinking in the right direction. As you can see here, I pulled up their 13F. This is Daniel Loeb's Third Point. This is for Q2 of 2020. They have about a $7 billion portfolio value, which is nothing to laugh about. As you can see, their largest holding is Walt Disney. Their percentage is about 8.42% of their whole portfolio is in Disney. So as you can see, they really care about what Disney does, right? And if they're telling you to cut the dividend and it's their largest holding in their portfolio, maybe they don't have a bias, right? As you can see, their cost basis is about $111. So let's head back to the Bloomberg article and take a little bit of a deeper dive. So as you can scroll down, activist investor Dan Loeb is urging Walt Disney Co. to permanently suspend its dividend and redirect those funds to a streaming service, saying the entertainment giant needs to lean in to a massive industry shift. And to be honest with you, I quite agree. I think right now, the company should definitely focus on streaming service. As you can see, I did want to compare the company. I know they're not direct comparable companies, but as you can see here, the market cap for just Netflix, which all they do is just have a streaming service, is about $240 billion. Obviously, Disney's a lot larger of a company. It's much more diverse, but as you can see, the market cap is $226 billion. So if they could capture a little bit of the market share that Netflix has and grow its Disney Plus division, I think it's going to definitely help Disney stock and obviously grow the company, which is what executives want. But let's keep going on. Loeb sent a letter to Disney Chief Executive Officer Bob Chapek Wednesday saying he believes $3 billion in annual dividends would be better spent on its direct-to-consumer streaming service, Disney Plus. He said doing so could more than double Disney's budget for original content, bringing in additional subscribers, lower churn, and boost pricing power. Now, I definitely agree with this. However, there's a little bit of controversial, right? I know a lot of people are dividend investors who focus on just building their dividend portfolio, and a lot of these people are investing in Disney. But personally, I am a growth investor. I prefer seeing a company grow rather than it just being like a value like a Coca-Cola where it's just kind of stagnant. So there's nothing wrong with dividend investing, but I definitely prefer growth investing. And I think this is what Daniel Loeb is actually trying to get the company to do. After this announcement, Disney shares rose as much as 2% on Wednesday. Disney has been the dominant studio at movie theater box office in recent years. That's a statement I definitely agree with. A few different high grossing movies that they came out with in the recent past years. Avengers Endgame, as you can see, Avengers Endgame, the budget was $356 million, but they ended up grossing almost $2.8 billion, right? Star Wars, The Force Awakens, Avengers Infinity War, The Lion King, The Avengers Age of Ultron, Black Panther, all these are high-grossing movies, and they're all Disney productions, right? So I definitely agree with that statement. But with brick-and-mortar cinemas suffering during the pandemic, the company needs to focus on streaming with new urgency, Loeb said. He cited the decision by Regal to temporarily close its U.S. theaters as a sign that cinemas are going away. That's another statement that I'm not really sure if I totally agree with. I think there's going to definitely be a reduction in the amount of theaters in the U.S. and I mean maybe even globally. I think there's going to be a large push to drive-in movie theaters. I feel like there's a lot of room to grow in that section, but I definitely feel like a lot of movie theaters are definitely going to be closing. They're a little bit oversaturated, if you ask me, for the moment. I personally don't really enjoy movie theaters. I think it's way overpriced. I could get the same experience at my house. Of course, I'm not going to get the big display and the great audio, but I also don't have to deal with kids crying. I don't have to deal with someone kicking the back of my chair. I don't have to deal with someone being on top of me. I could hear them laugh and breathe and just be obnoxious. So honestly, I don't really mind movie theaters going away. Like I said, drive-in theaters are just fine. Loeb's Third Point owns less than 1% in Disney, according to data compiled by Bloomberg. So he owns less than 1% of the company. Disney said last week it was laying off 28,000 workers, wiping out about a quarter of its U.S. theme park workforce. I did make a video on that last week, so if you want to go check that out, you can just check out my YouTube channel, or I'll leave the link to that in the description. Disney's dividend plans were already in flux. The company didn't pay its $1.6 billion dividend in July. And again, you probably already know this, but Walt Disney suspends dividend and cuts history of growth. Walt Disney suspends its dividend for the first half of 2020. Most of this is due to obviously the illness, but also because all their parks, which is a large section of the revenue, just were closed. Until this day, the California parks are still closed. China's, I believe, is open, and Florida is definitely open, right? Next up, as you can see, profit plunges 63%, hit by the illness impact, cuts cash dividend. Adjusted EPS dropped 63% to 60 cents in the 3 months ended March 28 from the year earlier period, while missing the 89 cents expected by analysts. Net income from continuing operations plunged 91% to $475 million during the same comparative period. Next up, this is a quote. We are fully confident that scaling the $75 million to several incremental billions and focusing that spend on Disney's iconic in-house brands like Marvel, Star Wars, Pixar, Disney Animation, as well as selected acquisitions would drive even greater subscription growth for Disney. Now, again, Netflix isn't a direct comparable, but a few different things that they actually came out with did really, really well, and I wanted to talk about it. So as you could see, BoJack Horseman did really, really well for Netflix. These are all Netflix originals, by the way. Stranger Things, I mean, this is a show that's definitely caught a lot of traction. Orange is the New Black, American Vandal, Mindhunter, Russian Doll, Unbreakable, Master of None, Glow, The Umbrella Academy, one of my favorites, Sex Education. It's a hilarious series on Netflix if you want to check it out. I honestly couldn't get enough of this show. But again, when you go back to Disney, Disney just has all these different things that they've been relying on for years. I mean, the High School Musical is not anything new. What they just did was they uploaded it to Disney+. Phineas and Ferb, same thing. Avengers, The Mandalorian, all these different titles that have been around forever. And I feel like if you're a new user, you've probably already seen all of this. So yeah, you might catch up and you might, watch this content for a month or two, but then you'll get bored of it. So I definitely think Disney should focus on creating new original content. Loeb said the company should merge its Disney Plus, ESPN Plus, and Hulu services along with an international product called Star into a single platform. That statement I don't really agree with. So Disney does own all these different services. They own Hulu, ESPN, Disney. There's been other activist investors that actually suggested they should sell ESPN and just sell it all overall. It is something that's decreasing over the years, right? But I definitely don't think they should bundle this all together, just because if I'm paying for ESPN, I don't necessarily care for Disney, right? Disney's more for like the younger people, the children, and also if you want to like reminisce on your past, maybe you'll get like Disney Plus, but that doesn't mean necessarily that it's going to go hand in hand with ESPN. So I don't think those two really bundle that well, and I don't think any of these should be bundled. You shouldn't force someone that just wants to focus on sport to also get Disney Plus and Hulu. That's just my opinion, though. He also said the company should raise the price of Disney Plus and no longer release movies such as Milan on a pay-per-view basis, including them instead in a customer's standard subscription. Now, if you're not familiar with what Disney did with Milan and the release of it, as you can see, $30 to watch Milan on Disney Plus right now is either outrageous or an amazing deal, depending on who you ask. And I totally agree with that statement. Disney went ahead and released Milan. You had to pay $30, A, and B, you also had to have a Disney Plus subscription, which is obviously a little bit more money. Now, it depends on who you ask, like this article says, if it's a good deal or not. As you can see right here, Disney spent about $200 million on the production of it. And they couldn't really release this movie to the public via movie theaters due to the pandemic, right? So this is what they ended up doing. It was very controversial at the time. It was something that hasn't been done before, especially by Disney. And it depends on who you ask. If you're a family of 4 or 5, maybe even 6, yeah, it's a great idea. But if you're just a single person who just wants to watch the movie, is it really worth paying that much money? You're paying $30 to just get the rights to watch the movie, and then you also have to pay for the Disney Plus subscription. But it ended up working out for the best. I think it did pretty well for Disney. Next up, we understand that a more aggressive investment strategy may pressure short-term earnings on the path to creating long-term value, he said, citing Warren Buffett's famous quote that companies get the shareholders they deserve. But again, I would love to hear about your comments down below. Do you think if they do start investing more on their Disney Plus platform, will they be able to take market share from Netflix? I personally do think so. But anyways, I would love to hear your comments. Also, if you enjoyed this video, please hit that like button. And also, if you want more videos like this, please subscribe. Thank you for watching, and I'll catch you guys in the next one.